Welcome to another video. Today I'm going to show you a simple price action trading strategy that works on USD CAD on the hourly time frame. To help us identify the price action, we're actually going to be using price channels or Donchian channels for the entries and the exits. Now I wanted to use them in the traditional way. Now the traditional way is we tend to buy breakouts of the highs or the upper Donchian channel and sell short or sell breakouts of the low or the lower Donchian channel. However, when I started testing this, I realised that it worked absolutely horribly on this particular pair and time frame. So horribly, in fact, I thought, what if I reverse the rules? And if it works that bad, then surely if I reverse them, then it might actually be profitable the other way around. Well, the reversal of those rules actually worked quite well. So rather than buying breakouts of the highs, what we're doing now is when we get a breakout of the high, we actually go short. So it's a reversal or maybe a mean reversion type strategy. And the same with the lower channel. When we get a breakout of the lows or the lower channel, rather than short selling and jumping on that trend, we're actually going to go against the trend. We go for a reversal and buy. So looking for prices to come back. This is why it's so important to test out these ideas that you read about rather than just blindly trading them. Because if you just blindly traded the breakouts of the highs and short selling of the lows, you on dollar CAD hourly time frame, you would have lost a lot of money. If you haven't heard of Donchian channels or price channels, don't worry, because we go over to the chart and I'll show you what they look like. And although I use multi-charts, most charting packages do have they either call them price channels or Donchian channels. And essentially what they do is you set the length of them, and we're actually going to be using 40 for our entries, so that's 40 bars or 40 hourly bars. And what they do is we set them to look for the highest high over the last 40 bars and the lowest low over the last 40 bars. Now we're actually going to use two sets of Donchian channels. We're going to use 40 and we're going to use 20. 40, we're looking for the breakouts of 40 for our entries, and then we're looking to exits on the breakouts of the 20s. Sometimes the 20 and the 40 low or high does coincide and it's the same price anyway. Why did I use 40 and 20? Well, it's just something that I started with because I remember reading about the turtle traders way back in the 80s, and I'm sure they at one point were using 40s and 20. I'm going to show you the basic strategy on the computer, and then we're going to go through step by step showing you how to improve over the basic strategy each step of the way. The original testing and the development, the improvements of the strategy is going to be done using data from 2008 through till the end of 2018. And that's what we call our in-sample data. That's the sample of data we're using to do all the testing and modifying on. Then what I'm going to do, once I'm happy with the development of the strategy, happy to get all the rules, what I'll do then is I'll look at some extra data, which we call out of sample data. And I'm going to use data from that day forward. So I'm going to use from the start of 2019 through till end of 2020, maybe even the present day, which is around February 21. That's our out of sample data. And then if the strategy continues to perform on that out of sample data like it did on the in sample data that we used to develop, then we've got half a chance of the strategy continuing to work in the future on completely new or unseen data. And if those out of sample developments look good on that 2 years plus worth of data, then I would then watch the strategy for a few months, probably just leave it running, see how it performs, make sure it's working on completely fresh data before I start applying real money to it. So let's go over to the computer and I'll show you these stages of development. This is the first chart we're going to look at. You can see it's US dollar, Canadian dollar, 60-minute chart. Now I've got 4 of these channel lines or Donchian channels on this chart. The very low one here, which is red, and this very above one, you just get a peek of it, the cyan colour one there. That's the upper one. They're both the 40 period ones. They're the ones we're using for the entries. And we've got white ones as well. So this lower white one and this upper white one is the 20 period, which we're using for exits. Now, This is showing the original rules. So what this is doing is it's buying breakouts above the upper channel and selling short breakouts of below the lower channel. So if we look at this bar here, see where my mouse is here, this is where we've entered, because this bar here is the setup bar. See, what we're looking for is a closing bar above the Donchian channel of the last bar. Now, the level of the last bar was here, so we've closed above it, so then we go long, we buy. Now, our exit is the opposite, but we're using the 20 period lower channel. So here we've got this bar here, we've got a close which was below the lower channel on the 20 period, so we've exited. We don't go short because it hasn't broken below this 40. Let's scroll back and I'll show you an entry. So we look at a short entry. So here's another long entry. So we've got this closing bar here, which was above this bar's upper Donchian channel, so we've gone long. There must be a short entry somewhere. Okay, here we go. So don't forget, this red line here is our 40 period Donchian channel, which we're using for entries. Now, see how the prices are kind of hugging along this 20, the 40 period catches up and it's actually the same until this bar here, we've got a closing price, it was below the Donchian channel of the previous bar, so we've gone short. Okay, so that's the simple rules for this original strategy. Now, in the modified strategy, which we're doing the opposite, so if we get a breakout and we get a close above the previous bar of the upper channel, we don't buy, we short sell. And of course, if we got this one here, where it's a close below the lower Donchian channel, we would actually buy. So just flipping the rules around. So let's look at the performance report. Here's the equity curve, and this is the equity curve that made me think that's so bad that we might be able to reverse these rules and actually come out with something quite profitable. So once I saw that, I then went ahead, coded up a reversal type strategy and applied it to the chart. Now, I've removed the Donchian channels just because they clutter up the chart, but this is the reversal pattern. In fact, we can see, look, we're in an uptrend here. We're breaking new highs, so we're actually short selling. Again, breaking new highs, we're short selling. We reverse the rules. And that's what the equity curve looks like. Pretty much, funny enough, the reverse of the original rules that we've just seen. It's not great, but it's kind of moving in the right direction, kind of promising. So the next thing I did was I added a couple of filters, looking at the daily bars. Now, we're working on a 60-minute intraday time frame. So I added some filters that said, okay, we're only going to short sell if yesterday's daily bar had a higher high and a higher low than the previous daily bar. So we're saying yesterday had a really strong up move, and today we're looking for a breakout again above the upper channel, so looking to short sell some real extreme highs, and the opposite for buys. We're only going to look for buys if yesterday the low and the high of yesterday was both lower than the low of the high and the high of the day before. And let's have a quick look. I'll show you that on the chart just so you know what I mean. So look at this bar here, for example. It's got a higher high than the previous bar and a higher low than the previous bar. So on this bar here, intraday, we can only look for short trades, not buy trades. Okay. This bar here, for example, has a lower high than the previous day and a lower low than the previous day. So this bar here, we're only looking for buy trades. It's that simple. Now, on this workspace, this is where we can see the same strategy again, but with those daily filters added. And here's the equity curve showing you what that strategy looks like. It's not great, but it's certainly better than it was and moving in the right direction. If we have a look at the total trade analysis, we can see that we've already got an average trade value of $77, which isn't bad, certainly enough to start working more with. The next development here, what I thought I'd do is, and after do this, is I'll look at time windows to take the trades. So it's a 60-minute chart, but what I'm saying is there a time window where we want to take these trades and a time window where we don't want to take them? Is there times of the day where these breakouts will actually lead to false trades and lesser profitable trades, and obviously times of the day where the trades will actually be more profitable? So at the moment we've been taking every trade 24 hours a day, but let's do an optimization to see what time we should start. So currently I've got the start time set at midnight and the end time set at midnight, so it's 24 hours. Do an optimization to see if there's a better time to start trading. And here's the results of that. You can see on this right hand column here, these are the times to start trading from midnight, 1 o'clock, 2 o'clock, 3 o'clock, all the way through till 2300 hours. Now I decided to go for 300. You notice 400 is probably the best, but it suddenly drops off to, look, we've got a $94 average trade, drops off to a $69.60. So I've actually gone for 300 just because it's got more stable trades next to it. And the same with the net profit. Look, we're looking at 49,000 with 53 and 46, the opposite sides of it. And we're getting a few more trades trading a little bit earlier too. So let's use 300 and see how that's worked. We can see straight away that the average trade is up to 84 now, $84 from 77. And the equity curve is fairly similar. It's certainly not worse, which is good. But obviously next, let's look at an end time, see if there's a better end time than trading through till midnight. So here we can see in our column my end trade. I've started it at 400. Obviously we're starting trading at 300, so there's no point in stopping the trades before that. So 400 through till 2300 or 2400. And if we look at the numbers, peak numbers seem to be, well, peak numbers in terms of net profit and average trade are 5 AM. But look, we've only got 103 trades. We're really narrowing things down there, and I don't particularly like doing that. I like to keep as many trades as possible whilst improving the average trade. So the numbers that sprung out to me were around here, the best one being 1900. But I decided to use 1700 just because it makes sense, because 1700 Eastern Standard Time is the end of the session anyway. So I thought that's probably the best one to be using. And the equity curve is looking slightly better. Look, we're now making some nice new highs. Let's look at the average trade value. We've got an average trade now of 104, which is another $20 up on the 84, which it was previously. But we don't have a stop loss yet, so we need to look at the stop loss. But before we look at the stop loss, and then we look at the out of sample data to see if the choices we've made here are going to continue to work on out of sample data that we haven't been developing on. If you like this sort of video and you find it useful, then please do me a favour and click the thumbs up button and like this video. And of course, if you haven't already, please subscribe, because it really helps the channel. In this optimization then, we're going to look at the stop loss. Now we're just using a normal fixed pip stop loss. Now we started the development from 10 pips all the way through to 500 pips in increments of 20 pips. Now the best in terms of net profit and average trade is, we can see, is 330 pips. However, that is quite a large stop loss. Can we use something a little bit smaller that doesn't sacrifice too much of the profit? And 250, we've got a 97 average trade, not a 101, almost 54,000, and we've got just over 54,000. So whilst we're not sacrificing too much profit, we are keeping the stop a little bit narrower. We've actually got a little bit less intraday drawdown than the 330. So I think we're going to use the 250 pip fixed pip stop loss. And looking at the average trade, we already know that it's gone down to 97. We can see that now we've got a largest losing trade of 250 pips. And the equity curve is still looking reasonable, so that's good. So now I'm reasonably happy with this equity curve and this strategy. Let's have a look at that out of sample data that we haven't applied the strategy to yet and see if the performance continues. Just before we do that, actually, let me just show you that the date range, what we've been using is 1st of the 1st, 2008 through to the end of 2018. And this one now, we're going to use 1st of the 1st, 08 through to, I've actually got it at the end of 2021, but we're not there yet. So the last bar on the chart is actually the 5th of February. So let's see how that's performed. Now we can see straight away with these green dots that we've been making new highs all the way, which is really good, which is exactly what we want. Let's have a look at the average trade. And the average trade has actually increased. It's increased from 97 to 99, which is really good. Haven't had any major losses. Our stop loss has still been working too, so that's good. So as far as I'm concerned, that's a reasonably successful strategy. Like I said, if I'm going to trade this, what I'll do is I'll probably watch it for another few months because things can happen in the future that we can't test in sample or out of sample. So I'd watch it a few more months before I actually applied live money to it. If it carries on performing, great. It's another strategy that I can use in conjunction with all my other strategies in my portfolio of trading strategies. We could also start having a look at the lengths of those Donchian channels. Remember I said we're using a 40 and a 20 period. Now that's what a lot of people would do. They start running the optimizations, seeing which lengths work best, and if you're not careful that can lead to overfitting or over-optimization, which ultimately is fitting that in-sample data, and what will end up is the strategy just will look okay in the backtest, but it just won't continue to work in the future. But choosing correct lengths, using and doing correct optimizations, that's a whole other video. Well, I hope that's been helpful. I hope you've enjoyed that video. What we've done is we've taken a popular trading idea, Donchian Channel Breakout, we've turned it upside down and reversed the rules because the original rules were never going to work, you saw that. But we've managed to create something with the clever use of a daily filter and using a particular time window, actually turned it into something that's actually usable. It's a neat little Donchian Channel mean reversion strategy. So if you enjoy these types of strategy video, then I encourage you, please check out some of my other videos. I often make strategy videos, and quite often I'll document the strategies, the ones that I've developed in front of you. I'll write them out in free PDFs that you can download, so people find those really quite helpful too. So until the next video, this is Jared Goodwin, and thank you.